In this presentation, we will take a look at multiple choice questions related to responsibility accounting, going through the questions and then practicing test-taking skills with them. First question, costs that the manager does not have the power to determine: A, uncontrollable costs, B, controllable costs, C, direct costs, D, indirect costs, or E, joint costs. Let's go through this again using the process of elimination. Costs that the manager does not have the power to determine: either A, uncontrollable costs. Sounds like a pretty reasonable term for costs that don't have the power to determine. B, controllable costs. Now, of the two, I would think uncontrollable would be more of a correct term. C, direct costs. That doesn't seem like they would be uncontrollable. D says indirect costs. Of direct or indirect, I would think direct would be a more reasonable term of those two, right? And then E says joint costs. And again, if they don't have the power to determine, maybe a joint cost could be reasonable as well. So we'll keep these items, go through it again. Costs that the manager does not have the power to determine: either A, uncontrollable costs, D, indirect costs, or E, joint costs. Now, of those three, A is going to be the most appropriate, right? Uncontrollable costs. However, note that some of those uncontrollable costs are probably also the indirect costs, the ones that are going to be allocated out. But we're considering here in terms of responsibility accounting, in terms of should we hold the manager accountable or not, and we hold the manager accountable for the controllable costs, not for those which they don't have the power to determine, those that are indeed uncontrollable. Final answer, costs that the manager does not have the power to determine: A, uncontrollable costs. Next question, system that identifies costs and expenses under each manager's control prior to the reporting period, often the use of flexible budgets: A, cost accounting system, B, managerial accounting system, C, financial accounting system, D, cost variance accounting system, or E, a responsibility accounting system. Let's go through this again using the process of elimination. System that identifies costs and expenses under each manager's control prior to the reporting period, often with the use of flexible budgets. A, cost accounting system. Now, cost accounting, again, it's kind of a general broad term, where it's not what we're looking for here on a more specific term, looking at the controls of management. So cost accounting is not what we're looking for. B says managerial accounting, and C says financial accounting. Of those two, we were thinking of managerial accounting, not financial accounting. So I'll keep that for now. And D says cost variance accounting system. Now, a cost variance accounting system seems like it could be something that we could use, kind of a budgetary type system of variance analysis. We'll keep that for now. And E says responsibility accounting system, which again sounds pretty appropriate given the terminology that we have up top in the question. Let's go through it again. System that identifies costs and expenses under each manager's control prior to the reporting period, often with the use of flexible budgets. So that is managerial accounting, but that managerial accounting seems a little too broad for this item, so I don't think it's B. Between D and E, we could use some type of cost variance analysis, but typically what we're thinking about here is the responsibility accounting system. So we're thinking about, once again, final answer, system that identifies costs and expenses under each manager's control, so who has responsibility for them, prior to the reporting period, often with the use of flexible budgets. That's going to be the responsibility accounting system.